Tesca Michael Karanja. Now, it used to be one of Kenya's largest banks, like 30, 40 years ago, but a rough patch made not so good times for National Bank. But to help us get through what National Bank is up to in terms of transforming and actually hitting Tier 1 status in about 3 years' time, we are now joined by Munir Ahmed, who's the CEO and Managing Director for National Bank. Munir, you joined the bank 2 years ago. What was your specific mandate in terms of turning around National Bank?
Sure. National Bank, when I joined took the reins in September 2012, roughly 2 years since. The specific mandate was transform National Bank into a top-tier bank. Very short brief. Obviously, big missions come in terms of short briefs. And that has been the mission we've been on for the last 2 years with the help of the board of the bank and our shareholders' support. We are on that mission still to make National Bank, again, a top-tier bank.
Yeah. I guess what the challenges for the bank previously was its engagement with certain officials here and there, but now how are you trying to clean up the backlog of what's been holding National Bank back and taking it forward into the 21st century in terms of banking strategy?
What we did with National Bank is first diagnose what's the problem, and to help us diagnose and define a pathway back to becoming a top-tier bank, we engaged the services of the world's leading strategic consultants, McKinsey, and we got the report and the strategy that we've crafted with their assistance beginning 1st of March. So effectively, actually, we've been on the new strategy for roughly 18 months, not the full 2 years. The program that we've crafted has got quite a few elements. One is for business to become a top-tier bank or to regain its position, you have to regain your market share. And we split that into two broad categories, the strategy. That is, one is the marketplace. What do you need to do to make sure that you regain your market share and your market position? And in there we've got three elements or three broad pillars of that strategy. We've got 7 pillars overall in the whole strategy. 3 of them market-facing, 3 back-end, and 1 overarching. The 3 those market-facing is introduce first business units in the structure of the bank. So basic organization restructure. It didn't have any of the business elements that you will expect in a commercial bank. So that we now have corporate and institutional banking, retail and business banking, and a new one we introduced was Islamic banking. So that became then therefore the focal point of the structure of the organization. Then the rest of the units become support units, which is the technology and operations, finance, HR, legal, all other departments that you find supporting, and the credit risk supporting the front end. So that was organizational restructure, one pillar. Yeah. Second pillar is product innovation, product developments, and crafting market relevant customer value propositions, because the customers didn't desert us for no reason. They left us probably weren't responding to their needs. So to craft those products that are cutting edge and relevant to the needs and the solutions required by the businesses and individuals.
If I may just jump in there, then how did you change the perception of customers? I know you've taken over that whole rebranding in terms of moving from green to now brown and yellow, but how else do you then gain back that market confidence?
Yes, that's 7 pillars, as I said, 2 front-facing, of which I've explained 2. The other 3 back-facing. The overarching one is actually the rebranding. It basically says, welcome back.
New lease of life.
Or this is under new management, as you will call it in any business that existed for a while and for legacy reasons have sort of lost its way. You have to sort of announce what you're doing. And it was beyond the colors. The colors obviously to demonstrate and draw a line that National Bank has transformed. But more important was to change the culture internally, that we cease to be bureaucratic, slow, all the things that research demonstrated, and remedy those at fundamental levels.
Yeah. The issue, I guess, way back when was bad debt in terms of the debts that were dragging down the bank. How far have you gone in debt recovery, and how much have you been able to get? I know at some point you mentioned that debt recovery is not a good business plan going forward in terms of profitability, but how much have you been able to recover so far?
Sure. I mean, on the debt recovery, it's again one of the other pillars of the strategy is strengthening the risk underwriting capacity of the bank as well as its capability of managing that risk. So more important than just recovering what has already gone bad, and a large part of that was actually so bad as irrecoverable, hence why it was recapitalized by the government way back in 2006 when the government injected a lot of capital to write off the bad debt. That aside, we've recovered quite the portion of the book that could be recovered. I think that's what sustained the last 4 or so years before I joined the bank. The profits that you've seen the bank was announcing was those recoveries, but those dry up. And what's important is how do you make sure that you don't get back there, and that's what we've built the other strategy pillar that I'm talking about of strengthening the bank's risk-taking capacity and balance sheet management. And that we've done it by doing both risk governance, policies and procedures, technology systems to assist with that, as well as the people, the talent that will drive that whole risk management by hiring from the sector.
And hiring has been quite an interesting subject for National Bank. But just away from that, a rights issue that you have been planning for quite a while now. It keeps being postponed, and I'm guessing that some of the capital that you need to actually re-inject into the business to drive some of the growth aspects that you're talking about. So when are we likely to see the National Bank have its rights issue?
The rights issue was approved by the shareholders unanimously in 2013 AGM June, and we are since now about 18 months. When we did the launch of the rights issue was at the beginning of this year. We did the bit that we are required to do by the regulator, Capital Markets Authority, which is to put together prospectus, information memorandum as it's called, and that's currently with the Capital Markets Authority for approval and has been there for a while now. The fundamental thing for us is the rights issue is supported in principle by all the shareholders, and the principal shareholders being government in our case, 70% combined NSF and National Treasury, and having fully supported the rights issue right from when we reached the point in June last year to the beginning of this year in February when the board triggered the process to run. We believe that approval in principle is in place. What we now need is obviously the decision to get it going, and that we are waiting now the principal shareholders
they're actually going to
come through with the approval. So that's the stage where we are at. In terms of need for that, I mean, we've had utilized all the unutilized capital the bank had, and we've grown the balance sheet. We've doubled the balance sheet to 109 billion as at the end of June. We haven't published the September numbers yet, so I can't disclose them. But we are therefore at the end of what our capital can do. It's not that it's a bad problem to have, it's a good problem to have. So it's just going back to the shareholders and saying we need additional capital to grow the business to double its current size.
Right. Just looking at your numbers, your half year was up about 17%, about 776 million. Your cost to income ratio by half still remains a bit of a challenge. Your balance sheet was actually even much higher. But just looking forward, in the next 3 to 5 years, what's your target in terms of actually that first of all, tier 1 status and offering exciting products to the market?
We have to grow our balance sheet to 3 times its current size, which, as I said, has already doubled from what it was at the end of 2012. By 2017. That we're on course, provided we get the capital required to grow the balance sheet. I mean, that's a regulatory requirement. For every shilling of capital, we can only write 13 shillings of loans and 13 shillings of deposits you can raise. So it's a critical component. It's like a factory capacity for us. We need that rights issue going. But provided that comes through within this year, we are on course to achieving that objective. On the bottom line, our objective is to grow our trading profit to 5 times what it was last year by 2017. Again, we've got well-laid plans for that. We're well on our way. We've introduced all the necessary products, business segments, And I have demonstrated, at least in the last 18 months, that we've been on the course to achieving that number. You mentioned the cost-income ratio. Obviously, our ambition is to bring the cost-income ratio to 50% by 2017. And we are one of the worst cost-income ratios at 5%. Why it's still hovering at the same level is simply because for a large part of the strategy, we have to invest. So the investments cost is hitting us at the same time as we're building the business. So it may look like we're static on that figure, but in reality, it's actually going down if you compare like for like, because within there you'll find we run a VAR of 200 people, and that cost is in there. So if you strip that out, actually, like for like, we've made quite good progress in 1 year.
All right, thank you very much. That has been Munir Ahmed, just CEO and Managing Director for National Bank, just telling us about the bank's vision and where he hopes to see themselves by 2017 in a tier 1 kind of status. Big target, but he's the man to lead the bank in that direction.